To the untrained eye, the last 24 hours on Bitcoin would be freaky. It's down $4,000 after finally hitting $70,000. What we can see from the analysis is a very strong change of trend. That's what we're looking at in today's video, along with the altcoin market. Huge signs that we're getting very close to the final tipping point for an altcoin season, what everyone has been waiting for, or at least that's for the degenerate traders, potentially like yourself and I. So let's try and balance out the analysis here with your home of macro cycle analysis, covering Bitcoin, the stock markets, real estate, and of course, cryptocurrencies. You're here on my channel, Jason Pizzino. Like and subscribe. You got there yesterday. We hit it, 3,000 likes. Let's go for another 3,000 in today's video. And the free crypto and economic report is out today. So link in the top of the video description is for that. All right, so let's kick it off with the data for the S&P 500. We'll go through the traditional markets before I get into Bitcoin and cryptos. The main point I want to have a look at here is a recap of the stocks throughout the entire S&P 1500. There was a very big narrative in 2023 that the stock market is only getting pushed higher by a very select few stocks, and that was leading the masses to believe that the bull market can't continue on. And of course, they were completely wrong. We had all of the analysts and hedge fund managers and all those names coming out on news like CNBC or CNN or X or YouTube. You know the deal. They were telling us that the market had to collapse throughout 2023. That is your year of 2023. It basically went up from that point. And now 2024 has been relatively strong as well. The last 7 months have been very, very strong. So the narrative was not enough stocks are pushing this market higher. Now we're seeing more of those stocks continue up while those top few have had a correction. And yep, we've seen the correction here. So whenever the percentage of sub-industry groups within 5% of a 6-month relative versus the S&P 500 cycled from above 60%. So a lot of them were near their lows to less of them near their lows to below 15% of those stocks. The world's most benchmarked index demonstrated solid returns and consistency over the following year. So basically now we're seeing a lot of these stocks getting away from their lows. So we've been covering the Russell 2000, the smallest cap 2,000 stocks in the US. And essentially the data here, looking at the last 70 years, the 3-month, 6-month, and 12-month all show a positive result of 74% or greater. So basically returns 7 out of 10 times, 8 out of 10 times over the following 3 to 12 months. Pretty reasonable results here for that particular index, especially as the narrative was, if there's not enough stocks pushing the market up, it can only go up for so long, and it's not a sustained rally, and it's all the same BS that we hear over and over again. They're always wrong when it comes to these narratives. And finally, these laggards, which are the small caps, catch up at a time when the larger caps are finally having a pullback, and that's what we're seeing on the chart here. So in terms of an area to be worried about this continued rally, and of course, my opinion of the market and what I've seen with the analysis over time is that we want to see the markets, stock markets, real estate, we want to see more money flowing into these markets because that is going to lead to money flowing into other assets like Bitcoin and cryptos. Essentially, you go down the degenerate scale. What's the least degenerate? Money should be there, and then it starts to flow down that scale. Real estate, large cap stocks, medium caps, small caps, penny stocks, and then somewhere in the mix there between those pennies and the small and the mids, you start to flow over into Bitcoin and the large caps in crypto, and then you get further and further degenerate the lower down the list you go, and that's what the laggards are. They're basically trying to play catch up later in the cycle. So plenty of support to the downside. Time to get worried would be a break under the previous old all-time high, back under 4,800 points, so quite a long way off. So any sort of corrections at this stage would be welcome to continue the health of this bull market to the upside. S&P 500 looking relatively good here. If we take a quick squiz here at the NASDAQ, on the monthly chart, you've got 2 days to go. Probably going to break this 15 or 16 year green July trend with a red month for the NASDAQ. Now it has to climb roughly about 4.2% to get back to the open to make it a green month. Does it really matter? I don't think so. This is still well and truly above the old all-time high, and that's the place to be worried if this trend is over would be a break underneath that old all-time high at about 16,500 points for the NASDAQ. So the major markets here are still looking relatively healthy, although they are in a corrective month. You can see it's red and they're probably going to close lower than they have opened. But nonetheless, Bitcoin is trending up and some of those stronger cryptos are also trending up. So the stock market's still looking relatively good. A quick look here for the Aussies. The Aussie market still above its old all-time highs and above the 50% level. So in a healthy position. What also could be affecting these markets is, of course, the US dollar. It's gone on a slide over the last several weeks. But in the most recent week or two, you're seeing a rally here coming back to test the 50% level at 104.57. So that's from the top to the bottom, slice it through the middle, there's your 50% level. So it hasn't been able to get above that yet, and it's still under this weak line here. This was the weakness that we were following since that double top. So you can see the breakout, tested, and then fell back underneath, tried to test it again on a lower top, and then fell back underneath. So my weak level is somewhere around that 104.9 to 105. Should the US dollar get above that level, then it's got a much better case to crack on and test the 106 and 107, the previous double top here before it collapsed. If not, probably going to see more downside over these coming months and years of the second half of the real estate cycle. So yeah, this is all on track for assets to continue to strengthen. You probably want to see a weaker currency for those assets to continue strengthening as well. You can see we've had a few days to the upside, and then the S&P 500, well, you've had a couple of weeks to the downside as well. So it's kind of going hand in hand at this point. That's also a healthy thing for the fear and greed index. It's back to neutral for the S&P 500. You can see it's basically been tracking around fear to slightly getting into the greed stage for a few days and back into neutral. And the thing's been cycling through that basically since April. So coming up to 3 months now. Good thing for the market overall, so the market sentiment doesn't get out of hand and you don't get this super extreme greed that continues to flood the market. So I still think this is relatively healthy considering where the price is at for the stock markets. Over to Bitcoin and cryptocurrencies. Let's have a look at some of those headlines. And the first headline, $49 million bull case. Michael Saylor. Okay, moving on from these ridiculous headlines, fear and greed index for cryptocurrency and predominantly Bitcoin, as we now know from the index up here and the movements on Bitcoin over the last several weeks. Basically, it continues to track mostly Bitcoin. Now it's at 67. Yesterday, 74. Last week, 71. So basically, there was a fair bit of greed going on, just dropped off because Bitcoin's price also just dropped off overnight as well. So again, probably not the worst thing in the world for it to continue to trade around or hope to see neutral to this greed, especially as the price continues to climb for Bitcoin and put in higher lows. So market sentiment resetting, good thing for the overall bull market here. That's what we want to keep seeing throughout this cycle. We don't want to get squeezed into extreme greed too fast. Nice gradual climb. Exactly what the doctor ordered. This one, very, very interesting. We're looking at the crowded market report brought to us by from Jason Shapiro. The blues, large speculators, reds, commercials, yellows, small speculators. And so you want to be on the side of the commercials, not the large and not the small. Basically, you want to avoid the speculators and follow the commercials. Or at least that's what I can see in this particular chart. So let's move my head to the top here and taking a look at where the price sits at the moment and whether there are any signals that we could see price go higher or lower. Basically, taking a reading from October 2023, basically when Bitcoin broke out right through here. Throw a line up there. That's it right there. This was the time where we saw a lot of traders saying, well, it's time to be short Bitcoin as it breaks out. Short it here. short Bitcoin here, short Bitcoin here, short Bitcoin here, short Bitcoin here. And they were basically shorting Bitcoin from 30K up to 70K. There is no way they survived. They were all big fat liars that they were trying to short this thing all the way up and finally get to the top. And of course, well, now it's time to short Bitcoin from there. But when you take a look at the large speculators were trying to short that entire run up. So you can see the months here. There's March going back to October, and they were all short. That's what it is on this side of the chart, and this is the long side. Sure, some of the small speculators were definitely on the long side, but they're almost always on the long side. So leave that for what it is. We're just mainly looking at where the big money is, large speculators and commercials. Commercials got on the side of the longs. They flipped over, got long when the trend was going up. That's where Bitcoin was going, trend going up. And now where we find ourselves is that it's a little bit indecisive. Short and then long and then back to the other side. So really there isn't an edge here in terms of exactly where the price could go for a more sustained move, which is why we keep trading in this trading range for BTC. You know, we've been stuck between 50 and 70 odd thousand now for just over 4 months. There isn't any sort of sign of either of these players, the commercials or the large speculators, taking a larger position on either side of the market. And well, I mean, that's left us with a shorter trading range. So with that in mind, let's take a look at the price of BTC today. And what I mentioned in the intro was that potential overbalance in price and time, a really strong signal that we use as traders at TIA. So the point of that is to identify a trend reversal in the price action long before the majority see a new all-time high. And that shows up here. You got the low to the top. You may have seen us use it before on my channel or on Michael's channel. And it was one of those tools that we used at the bottom, right down here at the low, to see how the price and the time had overbalanced to the upside, meaning there is more traders or investors buying and holding the asset, which show up in the price bars and then in the time. So looking towards the right of the chart. This thing helped us at that low. It seems like we've got a shorter term picture now of a very similar signal. You got 24 days to the upside, low to the high, and the price range was $16,400. So keep that in mind when we take a look back at the previous move to the upside, which failed. So low to the high, or in some cases, this high was a little higher, but taking a look here, you've got 15,500. So the price has done 900,000 bucks more, and the time is a little longer as well. So 24 days as opposed to 20 days. So it's something to keep in mind now as we're seeing a correction in price. This could potentially be that time that signifies one of the final nails in the coffins for the bears, and basically not seeing any price action underneath roughly $59,000 to $61,000, because we're starting to see longer moves to the upside with more price range to the upside too. Not talking about percentages here, just talking about price ranges themselves. So that is a very healthy sign for the continuation of the bull market. As I alluded to, there is another price range, price and time range to watch. It's potentially this top here. So it's 37 days, which means the price, well, the time actually would have to carry out, let's get 37 days up here, until the 11th of August. So maybe see another peak here. I'm relatively satisfied with what we've currently seen, but if that happened, we got to the 11th of August, that would be another very strong signal that this price is ready for higher prices, basically new all-time highs, because the price range in this case already has exceeded what we saw last time in that attempted move to a new all-time high before it failed and broke to a new low. So that's the invalidation to this signal. If it heads up and then breaks to a new low, you start the count again. So far, so good. Support to the downside, 60, call it 62,000 now for a round number. Otherwise, if you want to be more specific, 61,774 using our Kraken chart here. So keep an eye on those two levels and also those previous lows at 63,650, all looking relatively well. Now, you might have seen that I had the MicroStrategy chart up here. Michael Saylor and his talk looking at this particular stock. If you wanted to get a little more degenerate on your trading, maybe you're trading Bitcoin, you've got larger ranges here with the MicroStrategy stock. Now, I don't think I have to explain MicroStrategy to anyone. I hope I don't have to at this stage. Essentially, it moves similar to BTC, but probably has, in most cases, larger swings than Bitcoin. So if Bitcoin's going up, MicroStrategy's likely to go up. There's no guarantees in any of this, and you might get bigger swings, right? It doesn't happen exactly the same. As you might note here, you've got the May low and then the July low. So the July low is higher, whereas for Bitcoin, the July low was lower than the May low. So it's not always exactly the same, but if you're getting a trend to the upside, typically you'll see a trend to the upside for MicroStrategy. And in the case of the trend, it's going to be more than what Bitcoin does. Normally, no guarantees, of course. So you've got a roughly 53% move here. And then for Bitcoin, you've got a 30% move. So just short of half the move there. So basically, well, just short of double the move if you're looking at MicroStrategy. So something to think about if you want to get into that stock space. I'm definitely not trying to push anyone in the way of getting more degenerate. Something interesting to look at when it comes to beta plays, because you have a similar thing here with Stacks and Bitcoin. It'll probably show up a little better on the USD chart. So if you get a move from the lows, there's the July low to the top, 66%, and we just saw that Bitcoin did 30%. So basically double that. So you could stay in the crypto space and look for higher beta plays for Bitcoin, or you can move into the stock space. But note that it doesn't always move exactly like that. You can see the July low much, much lower than the May low as well. So if you're going to play that game, you have to expect bigger losses to the downside. So I think that's a good segue into cryptocurrencies now, as they're essentially just a higher beta play than Bitcoin and I guess Ethereum or some of the other large caps, right? If you want to get into this degenerate stuff, then it's really, really important that you've got some plan. If you don't have a plan or a strategy to get out, I would not be trading anything. If you don't understand how to get out, it's a recipe that you're going to lose money and lose it to someone else who does have a game plan for what happens if things don't work out. With that in mind, let's have a look at the total cryptocurrency market cap. Tipping point here, 650 billion. Current price about 480 billion. Now this is a total cryptocurrency market cap excluding Bitcoin, ETH, and stable coins. And to that tipping point is roughly about 34-ish%, depending on what the price is when this video goes live. Could be there, could be maybe 35%, whatever it is, right? The tipping point I've got here is above the 50% level of the entire bear market range. There it is, sliced in half, being roughly around 576 billion, and above the tops. So the current top that we just put in March, the market put in, and then the previous lower swing top on the monthly there back in March, April of 2022. So just over 2 years ago. That is again, roughly around that $650 billion level. So why have I called that the tipping point of this cycle? Well, I just want to have a look back at basically the only other data point we have for the total cryptocurrency market cap. We've got the tipping point, well, what I'm calling the tipping point through that particular cycle. What I'm looking for is a breakout of resistance and then an acceleration of the move. That's what I'm calling a tipping point, because up until there, it's almost like a balanced market. You've got prices going up, and then you've got some prices coming back, and basically keeping this trading range going on. So once you start to get out of that trading range, then you head into these accelerated moves. So faster gains, more volatility, a time where the masses get in, retail gets in, things get very heated. People don't want to hear anything about the possibility of prices going down. I saw a little bit of that in yesterday's video with just the mention of Trump and what could happen at the end of the cycle, that sort of stuff. People got crazy. I think they see a picture of Trump and it just brings on friggin' mental cases. I've got nothing against any of these guys. They're going to do what they're going to do. That's politics. Leave that to the side because people go ballistic and they think they know everything about politics. Looking back at the tipping point here, there's 100 billion down here, and it started to accelerate, pause for a bit, and then took off again. So I've got that next tipping point around 180 billion, which was above the monthly lower swing top, and also above the 50% level. So it's in a similar-ish position again. We had a very similar pattern form this time round. Price is about 35% away from that point. And should we start to pass that level, I suspect we might get a pullback or we might just shoot straight up. But in terms of, there's a couple of options there. It might not be that great of a pullback like we've just seen now. I'm not expecting there to be a long time for everyone to get set and get ready for this next move. It could potentially be like this little breakout here where you basically had a few weeks, people trying to figure out, is it on or is it not on? Bitcoin was basically moving higher at this stage and altcoins were holding above previous resistance levels. Meanwhile, the masses were hoping for lower prices. And then from that point, basically just skyrocketed and took off. So tipping point, roughly 35% away. Time frames, I get into this in more detail in the next videos because we've got a monthly video coming up probably in the next day or two. Looking forward to August and the rest of the year again. Basically, timeframes Q4, Q1, based on the weekly chart here. So 100 weeks and 100 weeks to get that first break, and moving forward there, about 110 weeks to that final breakout there, which takes us later in the year, I believe, or Q1. Okay, so that's the tipping point. With that in mind, let's have a look at some of the altcoins and how they're closing out on the month and what's coming up here. ETH, although it has had a fall under the 50% level, 2 days to go. It's still too early to say now because of how close it is to this particular low. But should it hold up above the close of April, there's 0.0497, and then the low of June 2022, so 0.0491. It's still not it's still not that bad, because it's been able to hold above both of those levels coming into this, potentially into this Q4 of 2024 where things might start to turn around. So this could be one of those final times. The invalidation to that closes under those levels, closes under these particular lows here, and a close under this. That would be absolutely horrible for ETH BTC. The only way it could get out of that, holding above there and quickly turning around the next month. So yeah, it's been a very, very slow grind. No monthly swing tops have been broken yet. Hopefully it's putting in a higher swing low, and that would also help the ETH USD price. In terms of the USD price, it got out of trouble on Friday of last week, closing back above that safe and threatening zone. That was around 3,200 points, and it's basically continued to climb ever since. The next level, 3,400. It's been a slow grind up, and you can see the slow grind down on the ETH BTC chart. Obviously, this is on the monthly. So Ethereum kind of in the balance there. But for something a little more clear, Solana, BTC, on the climb here, still above those levels. Basically, the only thing that's changing day to day here is the price just keeps getting higher on Solana versus BTC. But if we take a look at Solana USD, just had a bit of a pullback overnight because Bitcoin also had a pullback. So you can see this nice reversal bar up to the peak, a drop, and a slight pullback here. The invalidation here, breakdown of around 165. They have been the price levels that we've been watching here on the channel for confirmation. There's a resistance there. 150, 165 has been covered. Breaks underneath that swing bottom back towards the 50% level. Not entirely strong for Solana, but not the end of the world because you've got plenty of support back under here between 120 and about 150. So corrections probably on the cards. How severe? The strong ones, maybe Bitcoin, Solana, just in what I'm looking at here, probably not going to be too bad. ETH is a little weaker here because it's not above 3,400 yet. And one final one to look at is CAS. So I put this in yesterday's video and had a nice push above 50%, 28,500. So a good sign there for CAS versus BTC. Increased volume, higher lows forming. That's what you want to see from a technically strong point of view. Let's have a look at CAS USD now. So come back to my list here, 19.3 cents, nearly at a new all-time high. The all-time high is 19.8 cents. You got higher volume coming in, and yesterday was actually its highest closing price in history. Yep, basically the highest closing price in history. So that's a really, really good sign so far. Now, yeah, you got all higher lows forming. Could this continue on? Well, the trend is to the upside. You got to keep trading with the trend, have your stops in play. If you need to learn more about that, follow the traders here at TIA. We've got a free community section, and we have a $50,000 giveaway with Bybit as the competition begins in 2 days. To get access to this, link in the top of the video description. Subscribe to UTA, Ultimate Trader Accelerator. That'll get you on board with the free trading community over there. All right, guys, thanks for your attention on today's video. Hopefully you got a lot of value from that, and I'll see you back here at the next one real soon. Like, subscribe, you know the deal. Till then, take care and peace out.